Let this sink in for a moment. The lack of financial education cost Americans $450 billion in 2021. 78% of American homeowners are living paycheck to paycheck. And right now, most American homeowners are equity rich and cash poor. That's another word for broke. The media isn't helping you. Schools aren't helping you. And the government for sure isn't going to save you. As a top 1% mortgage professional and seasoned investor, I cannot sit around and watch these life-changing skills that I've learned outside of traditional schooling be unused, untaught, and thrown in the trash can. So until these statistics change, I'll be here every single week, preaching and teaching personal and professional finance, information that you can use in your life, however that looks, whether you are 16 or 60. Hey friends, welcome back to another Happy Homeowner Podcast. Today is a super special one. I've been waiting for almost a year to talk more about this. I've got a really great local real estate agent, Jen Schabell with John L. Scott. Welcome.
Thank you. I'm happy to be here.
This is going to be fun. And this is, I really, if I could do a podcast every single week with a great local real estate agent like you on it, I would do it for this particular program because I'm so passionate about getting the information out about this incredible loan program. I was telling someone the other day, like, I'm a huge home affordability advocate.
Yeah.
In fact, in May, I'm going to Washington, D.C. I get to lobby for the first time in my whole entire career. I've always stayed out of politics, but when it comes to home affordability in Washington state, it's something that I see the downside of it so often with renters and obviously with people trying to get into their first home. And today, in my opinion, in 18 years in the mortgage space, this is the number one or the only or main program that I've seen backed by the government that can actually improve home affordability. And so we're going to break it down today. We're not going to spend a ton of time. What I want you to do, if you have questions about this, is I want you to reach out to me or to Jen to talk more about this, because there are 2 or 3 main qualifying criteria that go into this. This is not for everyone. And so we're going to talk about what this program is, how to qualify for it. But Jen, in a nutshell, and I know when we were first talking about this, you're like, holy crud. We're talking about up to $150,000 in down payment assistance if you qualify for this program.
And you're saying 150K, like $150,000.
Like 6 figures.
Yeah, that's crazy.
Yes. And so most down payment assistance programs through maybe local banks or community banks, or that we already have through the state, will give you up to like $8,000 or $30,000 in down payment assistance to be used toward, and the key word is up to. This particular program, this is called the Covenant Home Loan Program through the Washington State Housing Finance Commission. Now, there's a couple of things, like, we're here today talking because I'm I'm licensed, but I'm approved through the Washington State Housing Finance Commission to, number one, fund these loans through them. We get the down payment assistance through them. Number two, to originate them and to teach the Homebuyer classes for this loan program. So what I want to do is I want to break down, one, what is this program? And then number two, who is eligible for it? And then number three, like, how do I get me some of this 150, right?
Yeah, exactly.
So first off, this is not a bank program. This is not where you like go shop around or you can go to different banks. This is not like one particular bank. This is Washington State Department. The Housing Finance Commission is actually providing this down payment assistance. They're providing this through a recent research study that they did. It's about 3 years ago. And they put obviously there's a lot of legalities that went into it, a lot of lawyers and a ton of data research. But what they did is they went back and they found that there were different ethnic groups prior to 1968, which, guys, this is like not new news. We all know this. Yeah. But in Seattle, in the greater Seattle area, there were different ethnic groups that were discriminated against relative to housing. Now, in our world, they can call it redlining or steering and all this stuff. And I don't want to get into that, and I don't want to make it too confusing for the listener. But because of that study, they've come out and they've now given down payment assistance to heirs or people that have a heritage linking back to maybe their grandparents or their parents living in Washington State prior to 1968. So in a nutshell, that's what it is. And that's who qualifies for it. Now, let's talk a little bit more about this program. It is not an income-based charity. People always ask me too, like, hey, like, where do they get this money? Where does the state get this money? They get this through a grant program that they've raised. And so I don't want to get into a ton of detail there. You can look it up. The Washington State Housing Finance Commission has a great website on this, like some FAQs and Q&As on this. But like I said in the intro, I think it is the number one program that combats the number one issue that's plaguing our industries, and that's home affordability. So I mentioned earlier, it's $150,000 in up to $150,000 in down payment assistance. It's structured. I want you to think of it this way. You buy a $500,000 house, and let's say you get the 20% down. So let's just use round numbers. What's 20% down on 500,000 is $100,000. Yeah. Okay. So you have a down payment of $100,000. You're 20% down. And let's say you have about $10,000 in closing costs. So you need $110,000 to write a contract, write an offer, and purchase a home. Okay. So that $100,000 plus covering your closing costs. So a first-time home buyer could literally get into a house with zero out of pocket. That's another thing that's crazy because down payment is an issue, right? With some first-time home buyers.
So instead of waiting 5 to 7 years, saving $100,000, they can just buy now with that.
Buy now. Yeah. So again, when it comes to home affordability, it's a huge solution. Now, another but what's the catch? So the catch is, if there is one, that 0% down second, if you will, that I just talked about, has no monthly payment, and it's paid back when you sell the house one day or down the road when you have enough equity, you can refinance. Okay?
So it's very similar to the other state bond programs where they give you 3 to 5% down.
Yep.
But this one you can get up to $150,000 down.
That's it. Yeah.
So you can even afford more house.
Yeah.
That's crazy.
So you can afford more. And I'm going to give you a real life example here in a minute, you guys, that and this is a recent closing that we just had, where you'll really be able to see the difference. So a typical first-time home buyer would use, for example, like FHA for their down payment or for their home loan program, which requires a 3.5% down payment, or they would use the down payment assistance program to cover that small down payment. But because you're financing more, your principal balance is higher, your monthly payment's higher, and your PMI is higher.
Yeah.
I'll give you a scenario here in a second, and I think it'll blow your mind. But let's talk about who this program is for, okay? So number one, it's for a first-time home buyer.
Yeah.
And I get people all the time going, what's like the definition of a first-time home buyer?
I think I wanted you to explain that to a client just the other day of because they owned a house, I think it was 20 years ago.
Yeah.
What's the definition of first-time home buyer?
The definition in Washington State of a first-time home buyer is you haven't owned a home in the last 3 years.
And that's great. Nobody would think that.
Right.
People would automatically think, I owned a home before COVID. That doesn't qualify me for, you know, you kind of base everything off COVID now.
Right. Well, I tell people this too, Jen. This is how I look at the mortgage industry, because the market, the economy, mortgage guidelines, rates, all of this stuff has changed, and it changes so much. Even if you bought a home in the last 5 years, and even if you haven't owned a home in the last 2 years, or you own a home, I have clients that have owned a home for 10 or 15 years, and they're now making they're upgrading or they're downsizing. I treat them like first-time home buyers because we're in a different economy. And I feel like they still need the same hand-holding and education. But the number one prerequisite for this program is you must be a first-time home buyer, okay? Most of our first-time home buyers are, they're on paper, have never owned a home. So it's just black or white. They are a first-time home buyer. All right, number two. And this is kind of a moving target, and this has actually moved in the last 2 years since this loan program. This is also a recent loan program that's been developed. Okay, so this hasn't been around for years, but you have to qualify under a maximum household income guideline or requirement. Okay, so the FHFA and HUD sets this per counties. Okay, so right now for the Covenant Home Loan Program, you need to earn. So let's just say there's a partner. There's, whether it be a husband and wife or a boyfriend or girlfriend or whatever, two people buying a home that live together that are first-time home buyers.
Yeah.
Okay. They have to earn less than $188,500 a year in annual household income. Okay.
Okay.
So that's prerequisite number 2. Now, prerequisite number 3 for this program, which there are basically 3, I call these just overlays. So for example, a conventional loan program, you still got to credit, income, and asset qualify, for example, with a government like an FHA or a VA or a conventional loan, right? These 3 criteria are overlays to a traditional loan program, all right? The third is heritage documentation. So I mentioned earlier, but I'm actually gonna read this so I don't misspeak here. To link your heritage, that this research study found that there was discrimination against certain ethnic groups. These ethnic groups produced in the study were Black, Hispanic, Native American, Alaskan Native, Native Hawaiian, or Pacific Islander. Now if you looked on the website, you'll find a few more ethnic classes or groups that were discriminated against, but these are the most common. So if you qualify under those 3 criteria, first-time homebuyer, annual household income under $188,500 a year, and you can provide some heritage documentation that a family member, typically a parent or a grandparent, lived in Washington State, Pacific Northwest, prior to 1968.
And that could be what, high school transcript? That could be pretty much anything, right? Just to show and prove that they physically lived here and were residents here in Washington State.
So that's a really, really good question, Jen. And on my website, so if you go to mymortgageguidedan.com, up at the very top, under home buyers, under that tab, you'll see this program, the Covenant Home Loan Program. 1, I list all the ethnic classes. Number 2, I list the multiple ways that you can document your heritage. Like we're talking, listen, this could be a grandparent that has passed, right?
Yeah.
So a death certificate that shows that they're here in Washington State, or they passed here in Washington State prior to 1968, or that they lived here prior to 68. Marriage certificates, we're talking media clippings, papers from divorce papers, papers showing that they served in the armed forces. There's also, I provided, I think, 3 or 4 different links to different websites where you can research your heritage or linkings to your heritage. So there's a lot of helpful information there. This podcast is more just to get the word out, right?
Yeah.
And to kind of help you better understand what goes into it.
Yeah, so, this is a great program that I don't think a lot of people even know about.
No, but you know what helps?
I mean, a lot of other realtors don't know about this.
That's why I want you here. Yeah, you're a popular realtor in town. So I think if you talk more about it, maybe your colleagues will be like, holy crud, like, wait, what? Like you said at the beginning, 150? Yeah. 150,000. So I want you to bear with us in the last 3 or 4 minutes, because I love to say this. Most people say, I hate to say this. I love to say this. It actually gets better. Like the $150,000, you guys, is actually, there's a forgivable part of this program where that debt, the 150 up to 150, gets forgiven by the state.
Yeah.
So
crazy.
I'm going to talk about that. That's my hook to keep you on the lure for a minute. But what I wanted to do earlier, I talked about a scenario. So I like a real life scenario that we recently just closed, Jen. So let's talk about this real quick. So I had a first time home buyer that I worked with. I want to say this was in January, started working with them in November. And I have their profile pulled up real quick. So I'm going to read a little of this so I get it right. So they were renting at $2,800 a month here in Snohomish County. Okay. They had $7,000 total in their savings. So when I first met them, they're like, we don't think we can buy, but we did hear about a home loan program that has some assistance with our down payment. I was like, yeah. So they initially came to me. This is what's fascinating. They came to me recommended by their real estate agent just to do the Washington State Home Advantage program, the up to 4% down payment assistance, right? And on that particular home, it was approximately $22,000. What we had found by going through the application process with me, by me understanding the variety of home loan programs that are available to them, and by me asking the right questions, we found that they did have heritage documentation linking them back to Washington State prior to 68. And so what we did is I had them provide a letter, a discrimination letter, that basically their grandparent lived here, And that because of that, they could prove it, and they had access to the Covenant Home Loan Program. So get this, you guys. They had already been pre-approved to purchase at the $575,000 price point with an FHA loan, using the down payment assistance program. At $575,000, the particular property that they were looking at, it was going to cost them, with property taxes, homeowners insurance, and PMI, everything included, about $4,115 a month. And they qualified for that. And although they didn't like that monthly payment, and most likely they would have bought, like you mentioned earlier, they most likely would have bought in the $500,000 to $525,000 price point. Instead, they were able to buy at $575,000. Here's why. We got them approved for the Covenant program. It got them the 20% down on $575,000, which is $115,000, plus their $14,000 in closing costs. So they received $129,000 in down payment assistance at 0%. So they're with their loan amount, the same property taxes, the same insurance, no PMI because they have 20% down, right?
I was just going to say that.
Their total monthly payment was $3,330 a month.
That's crazy. So a few $100 more a month, and now they're building equity. Mm-hmm. So in so many years, they're going to have $100,000 in equity versus $100,000 to their landlord. Yeah.
So get this, the savings between the two programs was a $785 a month savings because of the massive down payment, right?
Yeah.
So now, from a home affordability standpoint, we've crushed home affordability. So now that's not even an issue. They are very well qualified, and they can very well budget $3,330 a month versus $4,100. And so, and like you just knocked it out of the park. Now they're in real estate and they're building wealth. But this is the cherry on top of the sundae. I want everyone to listen to this. This particular client made under the $188,005. So they together made under that, but they actually made much less than that, earned less than that. So they fell under the 80% AMI. That's area median income. And with this loan program in April of 2025, they revised this loan program. And you can look this up. It's Bill HB 1696. And it stated that if a borrower makes under 80% of the area median income in annual income, that debt for the down payment assistance, if they live in the house for 5 years and are current on the mortgage, gets completely erased.
Just wiped off. Doesn't have to pay it back.
You're talking about generational wealth here. Literally given $129,000 of assistance to get into home ownership. And then now in 5 years, which the average tenure for home ownership for first-time home buyers, now it used to be 5 to 7 years. Now it's 7 to 10.
Yeah, that's crazy.
And because they could afford more, they're less likely to need to move because this home now is a little bit bigger. It meets. They're not going to necessarily outgrow it, right? So it's such a win-win. But I felt like sharing scenarios like this, one, helps realtors better understand this program. Mm-hmm. And then it also helps first-time home buyers better maybe visualize, okay, this could be me. Holy crud. And even if you don't fall under the forgiveness aspect of it, meaning where you make less than 80% AMI, you still, in 5 years, you're going to have equity. In 5 to 10 years, you're going to have plenty of equity. If the market continues to do what it's done over the last 40 years, I can run those numbers for you where you're able to sell or keep it and rent it out.
Yeah. Yeah. I remember I used a program years ago, and when I refinanced, it just kind of, I didn't even notice it really because it just went away, and it works.
We say this all the time, and I can say this because I'm 50 and I've been around the block and I've owned multiple homes, but in order to win the game, you got to get in the game. Mm-hmm. You got to get in the game. And so my biggest encouragement, I believe that everyone should own a home. I believe in the financial benefits of home ownership. And that's why I'm so passionate about this. And then the other part of it, like I said at the very beginning, I want to see everyone get into a home. And the number one thing getting in the way of that, since interest rates have risen over the last, we've seen rates go up, and then home values have continued to go up with high interest rates. Yeah. And so that's really causing a major home affordability crisis in America. And I believe that for specific people, this is a great government solution. And most of the time the government has zero solutions. They're just all talk.
Yeah.
So this is great.
Yeah. I always tell everyone, just get in there, get in real estate. And then the saying, don't wait to get into real estate, get into real estate and wait. Or don't buy real estate.
Yeah.
Buy real estate and wait.
100%. Yeah. So that's a wrap. I think this is enough about this program. I think it's enough to be dangerous. I guarantee if you're listening to this or if you're watching this, you're probably gonna have some questions. Do this. Don't rely on Google. What I always tell people too is make sure you're working with professionals. This is the largest financial decision of your life.
Yeah.
Make sure you're working with professionals. This is what we do. And this is what I would encourage you to do next. Reach out to me. Reach out to Jen. What we'll do is we'll do a 15-minute strategy call. We'll walk you through your particular scenario. Are you tied into a lease? What do you currently earn? How does your credit look? We're not going to pull your credit necessarily on that call, but we're going to have a discussion around this. We will have a heritage conversation with you. Like, hey, so you've listened to this. Tell me why you think that you might be eligible for this program in regards to your family heritage.
Yep.
Okay. And then from there, we'll direct you. The next steps would be to apply for a home loan, because remember, this is an umbrella over a traditional home loan program. We still need to run your credit. There still are credit requirements. There still are income and employment requirements, stuff like that. So I'm going to hand it back to you. Any parting thoughts on this particular program or our talk today?
It's just such a great program, and nobody should sit and wait.
Right.
All waiting's going to do is prices are going to rise like they've been for many years. Prices are going to rise. So don't wait around. If you think you qualify for this, reach out to us, because this is something you don't want to miss.
I agree.
And pass up on.
2023, when mortgage rates were 8+%, didn't crash the market, and we're down at 6, maybe sub 6 right now in, what are we, February of 2026?
Yep.
The market is solid. It's very, very resilient, because we have a lack of homes and we have a lot of people that want to buy. And with more programs like this and rates dropping, you're going to see more competition. So you want more information on this, reach out. Again, my website, mymortgageguydan.com. If you go up to the top toolbar, you will see this program. But you can always reach out to us and we'll walk you through that strategy call and help get you into home ownership like I believe everyone should do. So for now, that's a wrap on the Washington State Covenant Home Loan Program. We'll see you next time on the Happy Homeowner Podcast. Bye for now.
Bye.